have mixed feelings about the gaming industry. First of all, I'm not a gamer. The only game I can play is with my Rubik's Cube. But also because my best investment ever was in the gaming industry. That is GameStop. But one of my worst investments ever was also in the gaming industry. Do you? That's why I have mixed feelings about this industry. I'm not going to say that this industry, because I'm not a gamer, is totally in my circle of competence. But whenever you have a business, you look at the business, you try to break it. You break it and understand if fundamentally this business is in your circle of competence or not. For example, GameStop, although gaming was not really in my circle of competence, but I understood it as a retail business. And as a retail business, then it was in my circle of competence as a physical retailer. This is what I did with GameStop. But this is the mistake I made with DoYo. Although I thought I understood the business, but I failed to understand the implication of being a gaming company with all the regulations in China. So it is a mistake. The company we are going to look at today is another company in the gaming industry. It's not in China, it's in the US. It is Activision Blizzard. Before we go into details and talk about Activision, please make sure to smash the like button for the YouTube algorithm. If you are new to the channel, my name is Ishfaaq. I am an elite popular investor on eToro. Please make sure to subscribe and hit the notification bell so that you don't miss the coming videos. The main reason why I'm looking at Activision Blizzard today, I will just call it Activision, is because there is possibility of an arbitrage there. Activision is going to be acquired by Microsoft in an all-cash transaction. And if you look at the spread on the deal, I'm going to talk about that in a few minutes with more details. The spread on the deal today is over 20%. That's why I'm telling you there is the possibility of making money by arbitrage. But 20%, that's a big spread. And whenever the spread is so big, maybe there are some issues concerning this deal. First, let's talk about Activision, the business first. Because whenever you're making an investment as an arbitrage, whether the deal goes through or not, you need to look at the business. If it is a bad business to hold, whether there is arbitrage or not, why are you holding it? You need to look at the worst case scenario. The deal doesn't go through, what you're going to do with that investment. That's why it is important to know the business. So Activision, this is one of the largest video game publishers in the world. And they publish their video games from different brands, Activision, Blizzard, King, and also Major League Gaming. So all these brands fall under Activision Blizzard. And the company has released some of the most famous franchises in the world. For example, Call of Duty, World of Warcraft, and also Candy Crush. Which, by the way, I did not play any of these games, but I have heard them. I know they are famous. Normally, the company will give us their numbers in 3 different segments: Activision, Blizzard, and King. But you will see that these 3 segments, more or less, they do the same business. It's just different brand names. And if you look at the distribution of revenues from these 3 segments, of course, Activision is the largest one, but it doesn't matter. The margins of these 3 segments are not so different from each other. And I would not worry that one is growing faster than the other, because sometimes you will see one is growing faster. It's because they just released a new game, and that game was very famous. The other segment is going to release its game next year, so then the other segment will do better. But overall, the company is growing by about 5% per year, which is pretty great. The revenues of the company are growing by 5% per year. It's not amazing, but for a gaming company that has been in existence for decades now, 5% per year growth in revenues, this is still very good. And one other important thing to note is that their margins are improving. So although revenues are not growing that fast anymore, the profit margin, the free cash flow of the company itself is growing. And the company had decided before that they were going to buy back shares, they were going to pay dividends, but now because of this merger, they are not going to do that anymore. So you can see, in recent years, the company has been improving their numbers. Things have been getting better for this company. You may ask me why the stock price is falling. It's all because of cycles. The company is dependent on 3 franchises. 82% of their revenues come from the 3 main franchises. And this is an issue, because if most of the revenues are coming from only 3 franchises, then it means that if they release a new game and people don't really like this new game, their revenues may go down. That's why the market, one of the main reasons why the market did not really like this company in recent years. So what are the catalysts for the company apart from the merger? There is the metaverse. Every company wants to enter the metaverse, and maybe this is one of the reasons why Microsoft wants to buy this company. Also, there is already the brand recognition of these games. So it's not really a mode because it's very competitive, but they have the brand. So the brand is here. People who are used to playing these video games, who are addicted to these franchises, they are going to buy new games and play these games. So they have this brand. These are the two main catalysts I see today with this company. But it's not really so important that they don't have any catalysts like GameStop had. It's not that important. What's important with this company is that they are stable. They are very stable. But what about the numbers? What do the numbers tell us? We already said that revenues were growing by 4 to 5% per year, which is pretty good, I would say. And we say that profits were growing even faster. You look at the balance sheet of the company, they have $10 billion in cash and cash equivalents. And as I told you, they may use this to buy back shares in case the deal doesn't go through. You will see at the debt of the company, they don't have so much debt. So they have a really good balance sheet. So I have calculated the intrinsic value of the company by using the discounted owner's earnings. You can find everything on my research partnership. If you're interested, by the way, you can have a 1-month free trial on my research partnership where I talk about the companies in more detail. So you'll have more details on what I'm talking about today. Today, I can show you some of the calculations, but it's not complete. I cannot show you everything on YouTube, but there on my research partnership, you have everything. And also you have access to my investing course for beginners. It's for free on the research partnership. Now let's go back to calculating the intrinsic value of Activision. The assumption I made is that the revenue would still be growing by 5% per year, and the free cash flow would be growing by 6% per year, which is pretty low compared to what is happening right now. But you always need to take margin of safety whenever you can. So 6% growth in free cash flow. This is my assumption. I discounted the free cash flow at 10% because, as I told you, this is an amazing company, great balance sheet, and the terminal growth rate was 2%. The number I got for the intrinsic value, $36 billion. You look at the company today, they have a market cap of $61 billion. So it is overvalued in my opinion, because you also have to take a margin of safety. So Activision today is overvalued. Even if you look at the expected returns, looking at the exit multiples, it looks overvalued. The expected returns based on the current price is only 8%, which in my opinion is not really such a great investment. You want to invest in a company, you're looking more returns, 8% per year, it's not that much. But now we need to include the arbitrage. So if we include the arbitrage, as I told you, the spread is 20%. So if the deal goes through tomorrow, you make 20% profits. But a 20% spread, this is quite big. So what are the risks on this deal? The main risk is that there are going to be more antitrust probes on Microsoft because of this acquisition and other things they are doing, because the government in the US, they don't like the big tech so much right now. Microsoft acquiring Activision Blizzard will make Microsoft one of the largest players in gaming. They are already one of the largest with the Xbox, but they can be as large to compete with Sony or even Tencent. So that's why this is one of the main issues with this deal. But now let's say the deal goes through. It is going to be an all-cash transaction at $95 a share. So if you buy the shares today, eventually you'll be paying $95 a share. So it's an all-cash transaction. You don't have to worry about the stock price of Microsoft at all. And Microsoft, it can afford to buy this company. Microsoft has a lot of cash and cash equivalents. So it's not that you have to be worried about the stability of Microsoft. It's not like that. It's just the main issue, the main risk I see with this deal is the government not allowing the deal to go through because of antitrust probes. That's all. Let's assume now that the probability that the deal goes through is 80%. Normally for most deals it's more than 90%, but this one I'm always taking a margin of safety. Let's say it's 80%. Then the deal goes through in exactly a year. You will see that then the expected returns will be 11%. Because if the deal doesn't go through, the shares of Activision would go down. This is something you need to prepare yourself for. If the shares of Activision goes down, what do you do then? In my opinion, then Activision would be not undervalued, but it will be fairly valued. And I may make an investment in Activision. So even if the deal doesn't go through, Activision will be fairly valued and I may make an investment in Activision. You will see that the expected returns then will be 14%, which in my opinion is pretty good. So would I invest in Activision today? Yes, I am going to invest in Activision, and it's mostly because of the arbitrage. So let's summarize. I know I've talked a lot today. Let's summarize what we are going to do. There is this arbitrage opportunity, 20% spread. This is what I'm betting on. If it happens, it's good. I make 20% profits, I hope, in less than a year. If it fails, then what I'm going to do, I'm going to buy more shares of Activision because then it will be fairly valued. I hope then if it fails below the intrinsic values that I can buy even more. So today, how much of my portfolio do I wish to invest in Activision? I'm willing to invest 5% of my portfolio today. 5% of my portfolio, and it's not going to be immediately. It's going to take me at least 3 months to build that position on Activision because I don't want to rush. The stock price is falling. Let's hope it falls further so that I can buy even more shares. So it's going to take me 3 months. Then eventually, I expect that the deal will go through in about a year and a half maximum. Then I can close at a 20% or even more profits. If the deal fails, then this is a long-term investment because gaming will always be here. The gaming industry is growing. So this is a long-term investment. You will be able to buy a company fairly valued price. With all the uncertainties happening in the market, maybe even if the deal fails, the stock price can fall even further and then it will be even cheaper. So we don't know. For the time being, I'm betting mostly on the arbitrage. I think that the deal will go through. And even if it fails, because it's 5% of my portfolio, the maximum I can lose would be 2%. That's all. And I'm willing to take this risk, at least in the short term. So let me know in the comments, what do you think about Activision Blizzard? Thank you for watching this video. Please like, subscribe and share. Please watch these two videos if you missed them. Have a nice day and goodbye.